Back to you.
All right, thanks, Court. Take a look at Intuit today. The stock is, let's see, last time I looked it was down and quite a bit, about 3.5%. Online subscribers are growing, sales are increasing, but not as much as people expected, and partly because of a shift that Intuit's making to be more aggressive in the cloud. Is it going to work? Let's take a closer look at the tax software giant and small business software giant's earnings. Brad Smith is the CEO of Intuit. Brands, of course, include TurboTax, QuickBooks, and Mint. Brad, thanks for joining us. I want to dig right in here because the reaction of investors to this shift you've made was a little harsh after hours. It continues today. You're moving from a roughly $200 QuickBooks desktop product to a roughly $20 a month online subscription model, and that's changing how you recognize revenue. But are you going to be able to keep these customers and actually take on challenges like Zero, particularly in emerging markets? Why should investors believe that this is going to be Adobe all over again and that you're not going to lose to cloud competitors?
Well, thank you, John. I appreciate you having me on this morning. First of all, you hit the nail on the head. This is a good news story overall. We are accelerating to the cloud. We have over 30 million of our 45 million customers already in the cloud, and quarter over quarter it continues to grow. In small business this quarter, we grew 40% in terms of subscriber growth, up from 36% the prior quarter. And outside the United States, the growth was over 150%. You have to keep in mind the company's a 30-year-old company. This is not our first platform shift. We were born in the era of DOS. We made it to Windows. We moved to the web. And now we're embracing the cloud and mobile devices. And we have a really clear path to the future. And I am very confident that we're going to continue to succeed and be the market leader.
Now, you took on some additional expense. I believe it was around $40 million. My understanding is that was in customer support, and you're trying to shift from more of a desktop call center model to more in-app cloud model. Are there other expenses that you're going to be incurring during this shift that investors should be looking out for?
Well, John, first of all, we did primarily restructure our small business group in the past quarter. You just touched on one of the key aspects, which was customer support, building more of the customer care into the product through self-help as opposed to the call center model. The second thing we did is we moved our R&D investment into the cloud. And so we moved it away from the desktop product in terms of new features, and we invested heavily into the cloud. In terms of incremental investment, we're going to continue to make the investments in the infrastructure that we need, things like data servers, but overall, most of that investment's already been made, and now it's about just scaling and going to market.
So Brad, the fact that you're saying investors should expect small business revenue to decline 3 to 6%. I mean, is that speaking to the restructuring, or do you believe that there's been a weakening in small business sentiment as the economy continues to recover?
It's actually the result of an accounting change. If you adjust for the fact that we're now taking what had been an upfront sale and spreading it over a little more than 3 years, if you didn't have that accounting change, which is referred to as ratable revenue, our small business growth next year would be in the neighborhood of about 10%. So the small business growth continues to be strong and resilient. We simply changed the recognition of how we're going to count those sales so we can move more to an ongoing subscription model, and it pushes revenue out into the future periods.
Brad, you just ended your fourth quarter, and a lot of the analysts say that this is not as an important a quarter for you guys because of how heavy tax season is. As you move to a SaaS-based model, do you think your business will ever transition to being kind of more of a kind of an ongoing, people using it every single month for managing their finances type thing?
It certainly will transition to more of that over time. Ultimately, at the end of the day, though, tax is still such a big piece of our company, and that happens between January and April 15th. We'll still have a pretty big surge in our fiscal third quarter, but overall, you'll start to see more of an evening out in the first, second, and fourth quarters as well.
Brad, thanks for joining us. I mean, investors were a bit confused by Office 365 when Microsoft did it, very similar. Adobe Creative Suite shifting to the cloud. We'll see if this stock dip is an opportunity for investors or if there's trouble ahead. But I take your explanation about the shift in revenue to heart. Thanks for joining us, Brad.